Hey, it's Adam Anderson with WealthGuard Advisors.
Hello, I'm Blake Anderson, certified financial planner. Thanks so much for listening.
Well, it's been an exciting week. Friday was really rough. We had a big sell-off. It really accelerated. We broke through some of the big support levels on the S&P 500 that we've been looking at. Today, we had a nice little recovery. The S&P 500 was up 1%. And so we had a nice bump on high volume, basically on President Trump stating that, there looks like there might be some kind of agreement coming along with Iran, and we really hope for that. Uh, One of my feelings is that a lot of the bad news has been baked into this market, but we keep getting more bad news, which makes it go even worse. But once that news trend cycle changes and we get better good news, it'll start moving up. Last week we talked about similar what we saw with the tariffs last year. Once the bad news was all baked in, and then all of a sudden we had an agreement with Japan, we had an agreement with Europe, we had an agreement with these countries, and then everything was good news trickling in and making it go up. And that's kind of what I think. So we had a nice big recovery day today, but I'm not sure that we are out of the woods yet.
There's definitely big moves going on in the market around this whole war situation. At one point of the day, we were up over 2% on optimism there. And it seems that I know Iran said, no, we haven't had any talks. So still not perfect clarity yet. But it's a good sign that we're seeing that movement, even just on the hopes of some sort of resolution. There is also some optimism here. We did test the prior November lows in the market, and there is some evidence that we could hold those levels when we look at it from a technical analysis sort of viewpoint. Also, when we look at a wider view, and we see back from the lows in 2022 with all the inflation, it follows this growth pattern where last year we had a big pullback and then a strong run. And so there's also some technical indicators that we're testing a low along the lines of last year's low. And so hopefully that stays the case. Obviously, that's going to be contingent on ongoing news for war in the Middle East and all the carry-on effects.
Yeah, so it's been really interesting. So I usually don't see one day as a telltale sign that the market has shifted. So today we had a really good day, but usually I want to see a follow-up day on high volume. So we get a confirmation that we're in a upward trend again, and that we see that trend shift. And that's kind of hard to do to really, but I call this a sucker rally sometimes. You get suckered into the market's going to recover, and you want to be early, you don't want to be late. And it is a hard thing to watch because even back with the tariff issues that we had last year, we had one of the biggest days in history on one day back in the middle of the tariffs. And if you miss that day, you missed a lot of that upturn. So you don't want to be out, but maybe you don't want to be fully in. And I think that we could potentially still sink down into on the S&P 500 or the SPY into the low 600, 610, maybe even to where this previous high was. So I think that there might still be some downside to this potentially, but if the news starts coming in good, we see confirmation days that the market's turning up, then that could be the signal that things have actually changed. I really want to talk about gold. We had a really interesting day or really last week for gold and silver and precious metals. And the reason why I want to talk about this is because a lot of people feel that gold is a store of safety, of value, and and generally it's pretty consistent. We have seen one of the worst days since 1983. So in this period of time, it's down almost 17%, 16% in about a week and a half. So gold is having a really hard time. It has come down to a support level here. So it's possible that we'll see support. But why is it selling off when there's war? There's supposed to be people flocking towards assets like gold and silver, and it's not. So what's going on? I have a theory I'd like to share. This is what I think is happening, what I've heard people talk about. these countries that are in the Middle East, they're all backed up with their oil. They can't sell their oil. They need to support their economy. They've been storing gold for years. So they are selling large chunks of gold. So like on the CMEX, no, the COMEX, which is the commodities exchange, there is people selling gold at very high levels, larger than a retail level, like not in ounces, but in tons. And the people that have that kind of amount of gold are countries. So the theory is a lot of these Middle Eastern countries that are bottlenecked with their oil and they're not getting revenue in are selling their gold. And that's the reason why we are seeing gold and precious metals sell off. So that will also, contrary to what people think, war buy gold, opposite. So are we at a low? Possibly, but it has been a rough place to be. So on gold, at least the GLD, it's 400, which is about 4,000 on the ounce right now.
Yeah, it's interesting that we're going back and testing to basically the same value we were at the new year. So the huge run up we had in January, it's all gone now. We're back at the New Year value. It's also the prior high it hit back in October last year. So there's some indication that it might be leveling out here. But it just goes back to what we talked about a few weeks ago, where gold does not always trade the way you think it might. Um, there's a lot more complicated things going on just in terms of who's buying and who's selling, and they might not be motivated to the same factors that we are here as consumers. And we're like, oh, we see inflation and we want to buy gold. Is this perceived hedge? And it might not necessarily be the case. So just something to keep in mind when investing in gold, that it might not trade the way you expect it to.
And an interesting about gold today, so the market was up significantly. Gold was down over 2% for the day. So not a good sign. I do want to just back out to a longer history. We'll go about 15 years. And just to show, sometimes gold does nothing. This is back from 2011 to 2023. It's basically flat that entire time. So as a growth engine, maybe not so much. We had such a great couple of years, and if you have something that goes up 60% a year, maybe not the best time to buy it. But after this pullback here, it may be coming back to a buy area. So if you are really interested in owning gold, it's better to buy it now than it was a couple weeks ago. So, but still, to have expectations in check, not necessarily, a easy trade. It could be flat for years. And we saw that after 1983, where after 1983, it went flat for a decade plus before it really came back. So just a cautionary tale there. We're watching the S&P 500. We feel it could go lower is potentially, but we're watching it. And like we mentioned last week, what we've done is we've lightened up. If you have options in your account, we've been selling options against your positions. We've been closing down positions to raise cash if it was a recent purchase, or we're sticking to our convictions for those companies that we feel really are in the long haul going to work out. Because what we do know is, just like last year, we saw, this is a 15-year chart. Let's go back to a shorter chart. Just like we saw last year, we had a sharp sell-off and it recovered with a significant gain before the end there. Just like we saw back in 2022, we saw a significant sell-off with a significant gain. So we don't think being out of the market completely is the right thing to do. We feel like holding tight and hanging in there, sticking with high quality positions. And if something's dropped below your purchase price, we tend to close those things down and raise cash.
Yeah, thanks so much for listening. It's definitely been an interesting time to be in the markets. Most times are interesting in the markets. Here at WealthGuard Advisors, we are a fiduciary. We're responsible to our clients to act in your best interest. So if you feel like this market is too crazy and hard to understand, or maybe you just want a second opinion, we'd be happy to sit down, offer our advice, and see if we could be of service. We specialize in personalized asset management and custom financial planning based around your unique needs and objectives. So if that's something that interests you, we're open to free consultations, and Otherwise, we'll see you next week. Thanks.
Thanks for watching.